Thanks again for joining us here at Calkine TV. I'm Rose Jacobs and this is the latest update with breaking news. Commodity prices raced still higher on Thursday as Russia's invasion of Ukraine entered a second week, disrupting global raw material flows and boosting natural gas, coal and aluminium to record peaks, while crude oil and wheat scaled multi-year highs. Russia's stature as a top supplier in oil, gas, metals and grain has meant that harsh sanctions applied to Russian entities following Moscow's invasion of Ukraine has derailed critical resource supply chains. Ollie Hansen, head of commodities strategy at Saxo Bank in Copenhagen, told Reuters that the invasion has upended the markets. Supply chains are ceasing to work, which means we have dislocations all over the place. In just the past week since Russia launched its invasion, Dutch gas prices have more than doubled. Newcastle coal has surged by 85% and Brent crude oil has climbed by a fifth. Analysts warn that due to soaring prices, the supply shocks from Russia and a rebounding economy in top commodity consumer China are likely to spur demand destruction in the short term. Brent crude oil extended gains to almost $120 a barrel, its highest in nearly a decade, following a fresh round of US sanctions that target Russia's oil refining sector and data showing crude stockpiles in the United States, the world's top oil consumer, had hit multi-year lows. While earlier sanctions specifically did not target the energy sector, they were aimed at financial transactions and banks, which were hampering exporting capabilities from Russia, whose oil exports account for roughly 8% of global supply. The rally later lost its fizz, however, as prices slipped into the red on rising prospects for an Iran nuclear deal that could add extra supplies. Dutch gas prices touched a record €199 per megawatt hour, while Newcastle coal futures have also been on a blistering run since sanctions were slapped on the third largest exporter, surging to a record $440 per tonne this week. On metals markets, aluminium roared to another record peak, touching $3,741 a tonne on the London Metal Exchange, while nickel surged 8% to its highest in 11 years. Russia accounts for roughly 6% of the world's aluminium and about 7% of global nickel mine supplies. Precious metal palladium, for which Russia accounts for roughly 40% of global output, jumped as much as 4.8% to nearly $2,800 an ounce, a fresh 7-month high. Gold was barely steady as safe haven demand was eroded by worries about further interest rate rises that boost the opportunity cost of holding bullion. In grains, Russia and Ukraine were projected to account for 29% of global wheat exports in 2021, according to the US Department of Agriculture, so global wheat prices have jolted higher to try to accommodate a big drop in supplies from both countries. Chicago wheat extended its surge to set another 14-year high, taking weekly gains to more than a quarter, as Russia's invasion continued to fan fears of massive disruption to exports from the Black Sea region. US wheat figures gained 7.2% to $11.16 a bushel, its highest since March 2008. Russia and Ukraine also account for 19% of corn exports and 80% of exports of sunflower oil, which competes with soy oil and palm oil. Malaysian palm oil prices advanced as much as 5.7%, hovering near record highs on expectations that buyers would turn to the tropical oil to compensate for limited supplies of Black Sea sunflower oil. And that is the latest with the trending news right here at Calkine TV. But stay tuned right throughout the afternoon. Plenty more coming your way. I'm Rose Jacobs. Thanks for joining us.